Okay, welcome back. The market is looking under pressure. This is a fresh leg down that we are looking at. We're down 127 points. Actually, already, and we've not been trading for that long, just for about 45, 50 minutes or so. But there are two distinct phases. There was a gap down initially. The market stabilized down about 60, 70 points. And then starting about 940 or so, which is basically the last 10 minutes, there has been another slip, which is worth about 50 points, and that takes us down to about 17,700. The near-term support was 17,720, which was basically the low, the swing low made on the 13th of February. That is gone, and we are now firmly under the that particular level, and actually breaking 17,700 as well. Let's put the focus on the logistics space now in terms of corporate conversations. Mahindra Logistics is the next company which is on our radar. The company had earlier said that their second half FY23 revenue momentum will be slower than what they'd seen in the first half of the financial year. Rampraveen Swaminathan is Managing Director and CEO at Mahindra Logistics. He's joining us right now to take some questions. So thanks very much. Great to have you with us here. Appreciate your time as always. So I just want to start with just an update on what you told us earlier. Now that we are in the last quarter of this financial year, how are things looking? Which are the segments of the business which are still firing? E-com, for example, is about 18-20% of the business for you. How's that doing? And how are the other segments doing?
Good morning. I think the first 3 quarters have broadly been positive. I think revenue growth's been 26% year on year, so that's still pretty strong momentum. But as we said earlier, we do expect some slowdown. The automotive and farm markets are still holding up, continue to show robustness. Most of the consumer businesses also are holding up, though growth is a bit slower. I think e-com is where we are seeing a more precipitated kind of slowdown. Overall, we're still in line with what we said earlier, that the second half will see slower growth in the first half.
The second half will see slower growth in the first half. You had mentioned this a while back. You had a target of 10,000 crore revenues in the next 4 to 5 years. Would you want to tweak that given the slowdown, and what would the near-term revenue targets look like, say in FY24?
No, I think we don't give guidance on it, but we're still pretty much focused on that target. We kind of said we want to be in that zone of around 10,000 crores, somewhere in the F26-27 window. And that's something which we're still focused on. We are not kind of resetting that vision. This is just a short-term blimp. We have a very diversified market mix and a diversified service portfolio. And so we are pretty confident about that long-term view.
Okay, so 10,000 crores by FY27 is what we should work with, right, in terms of revenues?
Yeah, that's been the vision which you said, so we're still on course.
Okay, and on e-commerce particularly, I mean, you were talking about the slowdown over there. It's almost 20% of your revenues. How much could it slow down to in the next 1 to 2 years?
No, I think it's the growth trajectory which is slowing down, and it's not growth itself. We operate largely in the first mile and mid mile of the business, and have some position in last mile. So I think where we are seeing the impact really is consolidation of warehousing and mid mile infrastructure. So there is a bit of a slowdown, but it's not negative growth as such, and expect that to probably have a carry till F23 festive season, probably till the Diwali peak of this year.
So at least for a few more quarters, right?
A couple of quarters.
Because this will give us a sense of the broader consumer sentiment as well. Is this a unit volume slowdown in e-commerce as you see it? Or this, as you said, perhaps is a function of excess capacity which was created, warehouses, etc., which now is, it's taking time to grow to the level of volume that we will see this year and next year and beyond?
I think I've said this, as I said earlier, it's not really unit volume slowdown or reduction. It's really the fact that capacity is being added a bit, higher than demand growth. And because of some changing patterns, the shift towards marketplace volumes or seller volumes, there's a slowdown in the warehousing programs which we run. Unit volume is still growing. Inside volume is still growing.
Okay, we will have to keep the conversation short. Thanks a lot for joining in and giving us a quick update on how business is shaping up. We hope you wade through this challenging situation. Thanks a lot for joining in. But let's cut across to Shireen Bhan. She's in conversation with Vas Narasimhan, who is the global CEO of Novartis. Shireen, over to you.
Right as well.
We already have one manufacturing center here in our Sandoz business. I think beyond that, where we really focus right now is what we call our technical development capabilities. So a lot of our technical operations where we do a lot of the drug chemistry, some of the other things, that's what we do right now in Hyderabad. I think longer terms in terms of manufacturing, we're not in need of more capacity at the moment, given that we've actually trimmed our business down to focus as a pure play medicines company. So no plans for manufacturing at the moment.
You know, since you talk about the aspiration to move towards becoming a pure play innovative medicines company, and of course the Sandoz spin-off is part of that strategy, let me talk to you about what we can expect as far as the portfolio in India specifically is concerned. You've already divested some of your drugs here to JB Chemicals, Dr. Reddy's. Is that likely to be something that you continue to do? And in terms of the global pipeline, what will you bring to India?
When you think about our Indian story, it parallels our global story. And I would be remiss if I didn't tell the longer history of Novartis. I mean, we started out as a chemistry company, a dye-making company. So our relationships with India go back to the 1800s. And then really formative relationships in pharmaceuticals starting in the 1940s. You know, since that time, we've evolved from a healthcare conglomerate, and then over the last 5 years, with $100 billion of transactions, transformed into a pure-play innovative medicines company, where we really try to be at the leading edge in 5 therapeutic areas, places like cardiovascular disease, cancer, neurological disease, and then these new technology areas which we think can transform medicine. And we now try to bring that innovation to India consistently and at scale. So some of the things that I think I'm excited about are in cardiovascular disease. We have a drug called Entresto for heart failure. And now we try to bring a drug called Leqvio for high cholesterol. We also have done a lot in immunology with our whole immunology franchise, another area I'm interested in. And probably the big area now is cancer. And how can we be one of the lead partners with India in cancer? The last part of the story, which is probably people don't know as much about, is the amount of work Novartis does in leprosy, malaria, sickle cell disease, diseases that also affect the broader range of the Indian population.
You know, I'm glad that you brought that up, and specifically as far as sickle cell disease is concerned, this is something that made its way into the budget for this year in the finance minister's speech as well. But even on issues like malaria, and I think the concern has been that not enough R&D dollars are going into addressing some of these high disease burden challenges. So give me a roadmap of what we can expect as far as Novartis is concerned.
I mean, Novartis has a long history of investing in tropical diseases. I mean, we just recently committed in the Kigali Declaration in Rwanda, hosted by a range of global leaders, $250 million to continue to invest in research in these areas. Our history goes back actually 30 years in malaria, where we were the company to pioneer a drug called Coartem, which is the most widely used anti-malarial in the world. Now going forward, we have a dedicated R&D center. We're working on novel anti-malarials. Clinical trials are ongoing right now in Africa and India, with the idea to get even better treatments for patients with malaria. But then we also work on new diseases. You know, when you think about areas like leishmaniasis, cryptosporidiosis, which is a type of diarrheal disease, and of course sickle cell disease, as we discussed. And I'd be remiss if I didn't also mention that, you know, we are the only supplier, global supplier of drugs to treat leprosy. So our partnerships in leprosy span across India and are really fundamental to our ethos in the country.
So what are the big challenges that you face from an Indian perspective at this point in time? I understand that it's an important strategic market from a capability point of view, and that's what you're hoping to expand on, but not necessarily as a commercial market at this point in time. It's not one of your focus markets. What's the expectation in terms of growth going forward?
You know, there's so much potential here, for sure. And I think as the middle class continues to grow in India, the demand for more healthcare is going to continue to increase. India also has world-class medical centers. When you think about research, development, we're the leading multinational in doing clinical trials in India at the moment, so it's quite significant. I think the challenge now is for India to make the transition from being a primarily generics market to trying to support innovative medicines. And other countries have made that transition, most notably China. China decided to really forcefully look at IP and data protection, start to create a national reimbursement framework, modernize their drug regulator. And as you know, China has a really blossoming biotech sector. I think over the next decade, India can make that transition. And if India makes that transition, I would expect a large biotech sector to also come up here. Also, the diaspora could start to come back as well and really create those companies.
You know, you talked about the diaspora, and this gives me the perfect segue to address the issue that everyone's talking about, the number of Indian origin CEOs who are running global corporations today, Vaz, and you're one of them. When you hear about, people talk about this, there's almost this collective sense of ownership. How do you feel about this?
I mean, I think it's amazing on the one hand, and I think a lot of it comes down to why I would think about it is our forefathers and grandmothers and grandfathers who worked so hard to give us the opportunity, give somebody like me the opportunity to be educated in the U.S. and have all of the opportunities that I have. So I always think you stand on the shoulders of giants, and there must have been many giants walking around India, 50, 100 years ago.
If so many of you made it to the top.
It's extraordinary. It's extraordinary. So we've never all gotten together to really discuss how it happened, but I certainly know many of the other, and I know they all feel a lot of pride about it.
Okay, we are very proud as well. I mean, Indian CEOs leading the corporate world globally, who would not want to see that, right? So that's Vas Narasimhan. We'll, of course, get you excerpts through the course of the day on what Novartis makes of the global move, as well as the expansion plans that they have over the next couple of years. Let's take a quick break. On the other side, we will connect with Mitesh Thakkar for some technical trades.
All right, welcome back. We've got the market, which is down 145 points. I mean, this does seem like a serious cut now, no doubt about it. So it started at about 9:45 or so, and just 15-20 minutes in, we've lost, I think, a clean 80 points. Because I mean, we had about a 70-point cut, and we've added on to that in the last 15-20 minutes. 17,683 is where we are at. Banks, by the way, the Bank Nifty, if you can have that up, has broken below the 61.8% golden retracement of the Jan to Feb up move that we had. So that is also a significant kind of level gone. Mitesh is with us. I think helpful to get a sense from him how he's seeing things and what trades he'd want you to take. Mitesh, hi, morning. How are you looking at the price action so far, and what would you recommend?
Morning again, Prashant. I think earlier in the day we spoke about the fact that we've been exploring more of shorting opportunities. I think the index was heading towards 17,700, 750 zone. It's done that, it's broken that, and the setup still looks negative. So I think then there's a good chance that we are looking at a retest of 17,500 levels. So in that sense, looking at more of negative trades. Though right now I have one buy and one sell. The buy trade is on Aurobindo Pharma, which is reversing after a few days of pullback. So buy here with the stop at 460 for targets of 490. And on the sell side is Ashok Leyland. That's the stop which is mildly broken down. So sell with the stop just above levels of 148.5 and look for targets of 140.
Okay, thanks a lot for that, Mitesh. Well, let's go across to Manisha now to get a quick update on what's happening in the world of commodities. Manisha, the equity markets are really under pressure now. Are you seeing the same in the commodity space as well?
Well, most of the sectors, yes. But I want to talk about the energy markets, where we have seen a very sharp decline continuing. The crude oil prices have declined to 3-week lows now, and we are looking at pressure continuing for the natural gas prices. Remember, this is one sector which has seen an all-time high in the last year. $10 is where we were trading in the previous year. But currently, we're trading below $2.2 per MMBTU as well. So a very sharp cut coming in for this one. On the MCX prices also, we have seen very sharp cuts. It's a 28-month lows right now for the natural gas prices. And the prices have seen 10% of a decline in the previous week. And we have seen prices fall down by 45% in this year until now. Last year we were trading at something like 700 rupees per MMBTU in MCX. We're trading at 167 right now. So it has been a very sharp cut coming in for the international markets, and the Indian markets clearly mirroring it at this point in time. The reason that you have seen a decline coming in is because it is above normal temperature. We started 2023 with the warmer than usual winters, and that clearly weighs onto the demand side of the factor here. And then you also are looking at the US inventories continuing on the higher side. Whether you look at a 1-year average, 5 years average, or 10 years average, the kind of US inventories that are being held right now are much higher than this time of the period there. So when you look at the US inventories, they are 328 billion cubic feet higher than year-on-year basis, and and 183 billion cubic feet higher, and a 5-year average as well. The European gas prices also have continued to decline. We're trading at 50 euro megawatt on the lower side here, and this is the lowest since August 2021 that we saw in the prices there. The decline in Europe also is because the inventories are much on the higher side. The Europe storage currently stands at 64% full, which is much higher than a 10-year average of 54% full. So even with the energy crisis and all the concerns that we saw in the previous year, we are looking at higher storages. Europe also has been able to tap power generation from alternate energy sources. So whether it has been wind or nuclear, we have seen support come in from there. The US LNG exports from Freeport also has resumed. So much of the Europe buying will come in from US as well. And Norway, which was also having some outages, that gas also is back into the market. So there is normal supply coming in from there. All of those factors continue to weigh onto the markets. And $2 per MMBTU could break on the lower side is what the street is now looking at.
All right, thanks a lot for that. Well, that's on the commodity space. But very quickly, let's tell you what's happening in some buzzing stocks. Now, Voltas is the big mover this morning. It's up almost about 4%. The IMD, as we know, has warned of the first heat wave of the year coming through in March itself. The IMD has said that parts of the western region could reach 37 degrees Celsius in March. Wonder what's going to happen in May. But white goods companies, whether it's Voltas, Symphony, Blue Star, are all extending their gains this morning on the back of this. So Jefferies has put out a note on Voltas. They have a target price of 1,050 on the stock. They have a buy there. They say that the early heat wave points to an improved volume and margin outlook. And FY24 should see both the AC and the engineering segment do well. Voltas has also seen an underperformance in the last 1 year versus the Nifty. So there is definitely scope for further upside, and the stock is reacting to that up 2.5%. But Delivery is the other one. Meesho has declared some really good numbers, and Delivery is the service partner, delivery partner for them. So Mangalam is here to put all of that into perspective. Mangalam.
Well, Delivery, the fundamentals are strong as far as Meesho's performance is concerned, but there are a couple of reasons why the stock is lower in today's trading session. The first one was the large block trade that took place. Nearly 1.7% equity changed hands in a deal worth nearly 410 odd crores. So hopefully we will know the details of the buyers and sellers post-market today in the report. So that is something that is keeping the stock price pressured. The deal took place at a price of around 335 odd rupees. The second factor is that overnight there was weakness in the Nasdaq, and as that happens and the fears of interest rates staying higher for longer, all the new age companies stand to hurt. And the third one is the Mahindra Logistics management telling us itself that there has been some slowdown in the trajectory of e-commerce deliveries itself. But as far as Meesho is concerned, which is one of their large clients, almost 20 to 25% of their volumes come in from Meesho. They've done extremely well in the December quarter, almost 2.6 lakh orders, which is a 37% jump year on year, and makes Meesho the second largest delivery player as against, second only to Flipkart and pips Amazon as well. So as a result of which, Delivery should benefit from these volumes coming ahead. But today's reasons why the stock is lower are different from the fundamental reasons, which is good performance of Meesho.
All right, Mangalam, thanks very much. So Delivery is down 3%, but just a quick check on broader markets, right? Adani Enterprises is down another 6%, and that will come up on your screen. Power and Wilmar is down as well, between 3 and 4% there. We have Adani Green, which is down 5%. I mentioned Shilpa Medicare, which is down 4%. Just mentioning the top volume traded damage in the broader markets. ABFRL saw a fair bit of cut yesterday. It's down another 3.5% today. ABFRL, by the way, is one of the names we highlighted on the Editors Roundtable piece. One of the names which has seen the maximum earnings downgrades to F524. I mean, it lost sharply yesterday. It's down today as well, as I said. Torrent Power is down 4%. Ramco Cements is down about 3.5%. Uflex is down about 6% or so. There is Zentech, which is down 4%. HPL Power is down 3%. All Cargo saw some recovery yesterday, but that's getting sold into. It's down 4% or so. And there is Sonata Software, which started the day higher, but I think has reversed lower. Market breadth, of course, is flipped. It's now 500 stocks higher and 1,500 plus stocks which are down. That's about 3:1 in favor of declines. But we'll take a quick break for now. We'll get our exclusive conversation going with Pravesh Sinha of Tata Power on the other side to discuss the details about the rally in power stocks as the government invokes emergency clause of the Electricity Act. Stay tuned. There's an interesting conversation lined up after this break.